Ladies and gentlemen, good day and welcome to Q3 FY24 results conference call of VRL Logistics hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Alok Devra from Motilal Oswal Financial Services. Thank you and over to you, sir.
Thank you. Good morning, everyone, and welcome to the Q3 FY24 earnings conference call of VRL Logistics. So we have with us today Mr. Sunil Nalavadi, the CFO of the company. So I would now hand over the call to Mr. Nalavadi to give opening remarks and discuss on the performance of the company, and then we can take up the Q&A session. Thank you and over to you, sir.
Yeah, thank you, Mr. Alok. Good morning to all participants. I am Sunil Nalavadi here, CFO of VRL Logistics Limited. I welcome all of you once again for the earnings conference call for the quarter 3 of financial 24. During the quarter, the revenue is increased by around 8% from 686 crores to 740 crores. The increase in revenue is on account of growth in tonnage by almost 8%, and the tonnage is increased from 10,47,000 tons to 10,92,000 tons in a quarter. The increase in tonnage is mainly on account of increase in branch network of the company. Year on year, we added 120 branches, and these branches have contributed around 3.33% to the total tonnage in quarter 3 FY24. Our strategy of expansion of branch network is going to be continued and planning to add around 25 to 30 branches every quarter, especially in untapped market. Apart from the expansion in branch network, the increase in contribution from the existing customers also supporting for our growth. Further, we are acknowledging that many of the customers are shifting from unorganized operators to organized operators on account of the increase in compliances under GST law. On the other side, due to poor monsoon spread in southern states during the current year, we acknowledged a lower demand in these states, mainly in agro-related commodities. The southern region is the main market for our tonnage contribution, which is contributing almost around 40-45% to the total tonnage. The agro-commodities contribution declined in the current quarter by 5%. So the textile and cloth commodities have been picked up in the current quarter on account of festive season and maintained the growth rate of 14%. However, for the 9 months period, the growth in cloth and textile materials reached to 3%, which is below the average growth rate in tonnage. During the quarter, the realization per ton is maintained around 6,670 rupees per ton. Since the freight rates predominantly linked with the retail fuel rates in India and fuel rates are constant, we are maintaining the same realization. The increase in other costs other than fuel has not passed on to the customers, and the same is impacting on the EBITDA margins in the current quarter. The EBITDA is decreased from rupees 108 crores to 97 crores, and percentage to revenue is decreased from 15.71% to 13%. The year-on-year EBITDA decreased due to increase in employee cost from 104 crores to 127 crores, and percentage to revenue is increased from 15% to 17%. The increase in employee cost is mainly on account of annual increments which are effected from September 23 and increase in employees from 20,300 people to 21,200 people due to addition of new branches. And also, we carried out some internal promotion to the better performed employees. The fuel cost is increased from 204 crores to 225 crores, and percentage to revenue is increased from 29.7% to 30%. The fuel cost is increased on account of increase in kilometers covered by the own vehicles in the overall kilometers operated by the company. However, the average fuel procurement cost is reduced from 89 rupees to 89.34 per liter in Q3 FY23 to 88.83 per liter in Q3 FY24. The bulk purchase of fuel from the refineries at a discounted price is increased from 14% to 22%. Similarly, the vehicles repairs and maintenance costs, toll charges, tire costs are increased due to addition of own vehicles and increase in kilometers operated by these vehicles. The increase in these costs has been compensated by decrease in lorry hire charges by 2.86% to the revenue. The lorry hire charges have been reduced on account of low dependency on the hired vehicles in the current quarter. The toll charges further increased due to increase in toll plazas from 1,204 to 1,367 plazas, and also due to increase in toll rates and loading and unloading charges also increased on account of increase in rates, resulted into increase in variable cost and impacted on the EBITDA margins. The rent expenses, which is fixed in nature, is increased due to increase in number of branches and increase in space in major branches and transshipments during the quarter. We increased the space in key locations considering our expected growth in tonnage for the subsequent period. The same is resulting into lower utilization of space in the current quarter and impacted on the EBITDA margin. The EBIT of the goods transport segment is reduced by 4% from 9.57% to 5.41% on account of increase in depreciation. The depreciation and amortization cost is increased from 42 crores to 57 crores due to increase in CapEx and also increase in ROU as per Ind AS 116 on accounting of rental expenses for a long-term lease agreement entered by the company. The finance cost is increased from 15 crores to 21 crores, owing to increase in net debt from 46 crores as of 31st December 2022 to 271 crores as at 31st December 2023. And also increase in lease liability as per Ind AS 116 on accounting of rental expenses of long-term lease agreements entered and enhancement in branch and transshipment stake. The decrease in EBITDA and decrease in EBIT resulted into decrease in PBT and also same impacted on the profit after tax of the company. The PAT for the current quarter is around 14 crores, which has been reduced from around 38 crores, and percentage to revenue is reduced from 5.5% to 1.85%. On a sequential basis, the revenue is increased by around 3.32%. The increase in revenue mainly contributed by the increase in tonnage. During the quarter, the realization per ton, again, it is maintained. The EBITDA is decreased by 1% in the current quarter on a sequential basis from 97 crores to 96 crores, and percentage to revenue is also decreased slightly from 13.6 to 13%. The decrease in EBITDA margin is on account of increase in employee costs, which is increased from 118 crores to 127 crores, and percentage to revenue is increased from 16.5% to 17.23%. The increase in employee cost is due to annual increment effected from September 23. The remaining costs were compensated each other and not impacted much on our EBITDA margin. The rent expenses as a percentage to revenue is decreased. However, the same is impacted on increase in depreciation and finance costs based on the accounting under Ind AS 116. The EBIT margin is also reduced in the current quarter from 6.38 to 5.41% on account of increase in depreciation from 52 crores to 57 crores, owing to increase in CapEx and also due to increase in ROU as per Ind AS 116 on accounting of rental expenses. The finance cost is increased from 21 crores to the finance cost is increased to rupees 21 crores from 18 crores, owing to increase in lease liability as per Ind AS 116 on accounting of rental expenses of long-term lease agreements. However, the net debt is reduced from 280 crores to 271 crores. So decrease in again EBITDA slightly, and again the EBIT margins impacted on the slightly decrease in profit before tax, and also same impacted on the reduction in profit after tax in the current quarter as compared to on sequential basis. During the quarter, we invested into capital expenditure of around 25 crores, predominantly for the purchase of additional vehicles. The CapEx is lower in the current quarter considering the slower growth in the tonnage. The net debt of the company reached to 271 crores from 280 crores as of 30th June 2023. Going forward, in the near term, our growth in tonnage may be in line with the current growth. Going forward in the near term, our growth in tonnage may be in line with the current growth rate of around 10%. However, considering the network expansion, it may reach to much higher than the better growth rate as of today. And the realization improvement is possible only after the changes in fuel rates. Till that time, increase in other costs will impact on the EBITDA margins. The rent and employee costs are fixed expenses. The impact of these expenses is much higher in the current quarter due to tonnage growth is not at expected level, and same expenses as a percentage to revenue will gradually decline as against the growth in tonnage in the coming days, and it will support the increase in EBITDA margins to some extent. Please note that increase in depreciation and interest in the current quarter is fixed and periodical in nature. We are hoping that once our tonnage growth reaches better than the current level, these expenses as a percentage to the revenue will be reduced, and which will support us to increasing EBIT and PBT margins going forward. With this, I conclude the initial remarks. Now I request the participants to go for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead, sir.
Yeah. Hi, good morning, everyone, and thanks for the opportunity. I have 2 questions. The first one is on the CapEx. So CapEx, if I look at the 9-month CapEx, it is quite low than what we were targeting at the beginning of the year. So what would be your CapEx target for FY24, and whether there will be a spillover from FY24 to FY25, and hence the target for FY25 as well?
Yeah, basically, see, again, our CapEx plan always it is in line with the tonnage growth. See, if you see in quarter 1 and quarter 2, aggressively we invest into CapEx, whereas in quarter 3, considering the tonnage growth, again we reduced. So we can, timely adjust our CapEx. Even though there is a commitment with the OEMs, but this CapEx can be spread in subsequent periods. So that's the reason always it will be in line with the tonnage growth. If we are expecting, around 15 plus growth in the tonnage, then definitely CapEx will be in that line, because always whenever the tonnage will increase to that extent, actually we need to increase the CapEx, because most of the tonnage we wish to cover through our own vehicles.
So what would be the CapEx guidance for FY24 and 25?
The guidance it will be around 15% more than the currently what we are investing.
Okay.
See, for 9 months we invested 223 crores.
Mm-hmm.
And for next quarter, again, it will be in the range of around 25 to 30 crores. So on a full year basis, it will reach around 260 crores. And for the current year. In addition to this 260 crores, so in FY25 and 24, it will be around 260 crores. And 25, it will be around 275 to 300 crores, based on the current trend. Then if tonnage growth is beyond this limit, then definitely it will be more amount.
Got it. Very clear, sir. The second question is, since you highlighted that there are several moving parts now with the fixed cost getting higher because of the increments and all, and tonnage growth not moving as we expected initially. So what kind of EBITDA margin are we targeting in current year and FY25?
Yeah, and for 9 months, say our EBITDA margin we reached around 14%. And similarly, in the next quarter, again, we are expecting around 13 to 14% EBITDA margin. On a full year basis, it will be around 13 to 14%.
And for next year, can we expect some improvement because of...
Yeah, definitely. See, just we are waiting for the changes in the fuel rates. So till the election, it will continue at the current basis. Then post that, if any changes, either increase or decrease, both aspects will support us. Because the moment it will decrease, we no need to pass on that entire benefit to the customer. That is point number 1. Because even after from the last 1 year, actually we have not changed the freight rates. Even in the case of decrease in the fuel rate, no need to pass on that benefit to customers. If it increases, since the gap of increase in freight rate is very long, so that immediately we can take increase in the freight rates across all the segments. So in that case, definitely it will support for increase in our EBITDA margin. Just we are waiting for the changes in fuel rates.
Okay, great, sir. Got it. Thank you so much and all the best.
Thank you.
Thank you. And the next question is from the line of Manan Shah from Electrum PMS. Please go ahead, sir.
Hello, am I audible?
Yeah, please.
Hi, sir. Thanks for the opportunity. So my question was, what advantage do we see in being asset-owned rather than being asset-light? Correct me if I'm wrong, but wouldn't our margins be better if we go for an asset-light model?
No, it is not the case because all along, our strategy is to own the infrastructure and operate. So, and in many times actually our margins were much higher than as compared to other operators. But during this time also, what is happening in last 1 year, since we are unable to change the freight rates, that is impacting a little bit on the margin side. But if you see on the capital expenditure side, we are very much, control on the expenses, utilization of the assets, utilization of the infrastructure. See, those are not at all reason for the impacting on the margins. The impacting of the margin is mainly on account of the freight rates versus the increase in expenses. And most of the increase in expenses are related to, one is some of the variable costs like toll expenses and other charges. And the employee cost, again, there was a huge gap for employment, increase in employee costs. So that actually we effected in September, and since it is a fixed in nature, then gradually again it will come down as a percentage to the revenue. And the depreciation and again finance costs are increasing because of the Ind AS accounting. We on the lease basis only actually we expanded many of the premises. So there actually what is happening as per the Ind AS 116 accounting, most of the expenses are shifting or accounting in the depreciation and finance costs. That's how the margins are impacting. But owning of the assets versus the margins, these are not directly we can compare.
Okay, but if we are asset-light, so we can pass all the fuel cost increase and everything to the customers, right?
No, just we cannot do that. Because again, if it is a asset-light, again, we will depend on a third-party infrastructure. And how third-party will decide the entire margins will depend on that. Here what will happen, in our case, we will have a control on assets. We are having a control on services. But only thing actually since the fuel rate is constant and most of the customers what they refer in India, they always link with the retail fuel price. If fuel rate is increased, not increased, why you are increasing the freight rates? So convincing of increasing other expenses is very difficult in this industry.
Okay, got it. Thank you so much.
Yeah.
Thank you. And the next question is from the line of Krupa Shankar from Avendus Spark. Please go ahead, sir.
So good morning and thank you for the opportunity. The first question is on the entire pricing philosophy which we have. So given that there have been substantial price increases and we generally take price hikes, annual price hikes in the month of March, while all the escalations happen towards in the third quarter with respect to employee and so on. Is there a way in which we can sync it with these escalations itself rather than waiting on for absorbing the cost for about 5-6 months, given that freight rates is more or less not in our control? So any thought process, and the industry freight rates is not under our control. So any thought process behind the pricing philosophy change if the management is thinking anything about it?
Yeah, basically, see, earlier the fuel rate used to change only in around 2 to 3 times in a year. Just I'm going back to around 4-5 years back. During that time, what used to happen? So once in a year, from the April itself, every year we used to renew or change in the freight rate. That was the concept. Now gradually, what happened? The fuel rate started changing on a daily basis. At that time, even our freights becomes daily basis. We started changing. In the sense, once in quarter, once in half year or twice in half year, we were changing the rates. But currently, what is happening in the last 1 year, since the fuel rate is not changing, so again, we are not in a position to increase the freight rates. That's what the scenario. But the other expenses, say like employee costs and all, these were due in the April 23 itself. But we postponed for another 5 months, and we took an increase in employee cost or increment to the employees we took in September. That is before the festival season. Even we pushed for 5 years. At that moment, again, if you see the fuel rate, again, it is a constant. Even at that moment, we were unable to change the freight rates. That's how, the impact is on the margin side. And we expected, tonnage growth, definitely it will be around 15 to 20% in the beginning of the year. And in first quarter, we did that growth. But subsequently, what happened, again, because of the, critical monsoon conditions, especially in the southern states, which is major portion of our business area, that started impacting. If you see, this region has grown hardly around 2% growth in the year. Since we are carrying out the expansion of the branch network, focusing on the untapped market, we are still in a position to maintain the growth of around 9% tonnage. But even at this growth, it is not enough to maintain or increase the margins. So one is our tonnage growth has to reach at least around 15% plus. Then at that time, again, we will reach a EBITDA margin 16-17%. Or we have to increase the freight rates now. Freight rate increase, just we are waiting for changes in fuel rate. Then immediately after that, definitely we are going to carry out that activity.
Right. So with respect to the tonnage growth, are you citing that given that what is the expectation for FY24 as a whole, sir? Was it 10%?
Yeah, around 10%.
So that translates to fourth quarter having a 15% plus growth, right?
No, in fourth quarter, again, it will be similar, 9 to 10%. The reason is, the monsoon will not change from the current period to next quarter. So this will, the impact of this, the poor monsoon will continue in the next quarter as well. And we are hoping that if things change from the Q1 actually we are expecting things to be changed. Because again the new monsoon period will start. Then we are hoping that there will be, again fresh demand from the market.
Right, sir. Right. Then, so logically, I mean, looking at your branch expansions be continuing, and while we could see that compared to last year, this year the contribution from new branches has slowed down. Anything to read over there? So because you're still hopeful that newer branches contribution would go up substantially. Is there any specific trigger due to which it has been relatively weaker this time around?
No, always what will happen if we open, say, branch in an untapped market, say for example in the UP. Again, that branch will not do business only in UP because it depends on demand in other regions also. See, most of the UP materials will move to Karnataka or say to the southern region. If there is no demand in southern region, then that will impact the tonnage contribution from the UP branches also. That's the reason that same trend is continuing. See, since the southern region is, the tonnage growth is slower, then it impacted even on the newer branches also. So earlier the new branches used to contribute in the range of around 4 to 5%. Now it has been decreased to around 3%. Okay. So it is not belong to one particular place. It depends on the entire region, and again delivery point is also equally important.
Got it, sir. I have more questions. I'll get back in the queue. Thank you.
Thank you.
Thank you. And the next question is from the line of Anshul Agarwal from MK. Please go ahead. Hello, Anshul? Hello, Anshul?
Hi, am I audible?
Yes, you are audible.
Great. Good morning, sir. Thank you for the opportunity. Had a couple of questions. First one, when do we start seeing the benefits of owning trucks versus leasing external trucks come or fructify in our margins? My question is based on, even in this quarter, sir, we have seen 20-odd% decrease in lorry hire charges, but that has been completely offset by vehicle running expenses and other stuff. So when do we see these benefits of owning trucks kick in into our gross margins?
No, basically, see, as I said, we add a vehicle or increase the vehicle only when there is a demand. So we will not have a idle capacity and search for the tonnage. So even in the current quarter, if you see, there is, even though lorry hire is increased a little bit, again, the fuel cost is decreased and there are decrease in other expenses also. So basically, my point here is, whenever we add a vehicle, always we utilize those vehicles with 100% capacity, and then only we go for hired vehicles. See, we do not have a long-term contract with the outside vehicle. Always we have a contract on a spot basis, then only we engage a vehicles. So the benefit of owning the vehicles starts from the moment we purchase the vehicles, not that actually we have to wait for a load or something.
Okay. So, what would be our truck utilization levels in the current quarter versus, say, last quarter?
The current quarter and last quarter, again, the hub-to-hub operation vehicles are operating with a full capacity, the 100% utilization. And again, hub-to-branch, the utilization levels are around 60-65%. And it will be always, that range, because those are all scheduled vehicles. Every day, the branch or hub the vehicle has to operate.
Okay, we are not seeing a dip in utilization levels despite adding capacity. That is what I have tried to understand.
No.
And
just I want to give another example. If you see the growth in tonnage on a quarter-on-quarter basis, it is increased by around 3%. And similarly, the capacity is also increased by hardly 3%.
Okay, so capacity will also track volume tonnage growth on a quarterly as well as on a Y-on-Y basis as well. It will go hand in hand. Great. And so do we have any planned incremental ROCs for these new trucks that we deploy? I'm trying to understand what will our ROC profile look like, say, couple of years out, once we have seen the entire capex go through that we are deployed in 23.
No, basically in good times, see our return on capital employed, we reached even 25-26%. So whenever we are having good margins and this one, see our ROC reached to 25-27%. So that is our target to achieve that kind of ROC, and it is possible. So for the year actually what is happening, the impact is because of the freight rate. But to some extent, volume growth also not at a expected level. But since both will go hand in hand, then definitely our ROCE will be in the range of around 25-27%.
Okay. And sir, our medium to long-term volume growth targets would be still 15%?
Yeah, current year, see, as I said, in the Q4, again, it will continue with the same line of our existing growth. And from Q1, we are expected better growth based on the new monsoon season, how it will come up, how the reports will start, especially from the month of April and May, how the monsoon reports and other things. And depending on that, we are expecting our growth will be better in FY25.
Okay, great. Thank you so much, sir.
Thank you.
Thank you. And the next question is from the line of Dhananjay from Ask. Please go ahead, sir.
Thank you, sir. Just a couple of questions. Which segments are we seeing good growth from, and which segments are we seeing weak growth from?
You are saying the zone-wise or product-wise?
Zone and product and customers, in terms of which industries are they focused on?
Yeah, basically, see, we on a 9-month period, we did a good growth in eastern markets and even the northeastern market, which grown, the eastern market has grown almost around 25%. The north grown by around 17%. The northeastern growth is 24% since the base is small. And western region, we were grown around 10%. But south is grown by around hardly 2.9%. But south is a major contributor to our tonnage. Almost around 40-45% tonnage is coming from the south.
Okay. And would this be just because of the cyclone, or are there any other factors?
See, according to us, there is a dip in agro-related commodities, which is declined by almost 5%, and the total contribution from the agro commodities is around 8 to 9% of the total tonnage, but it is degrown by around 5% in the current quarter. And similarly, the cloth and textile, which is major again contributor in our goods, which is contributing almost around 18 to 20%. But the growth of cloth and textile in the current quarter, it is around 14%. But on a 9-month period, the growth is hardly 3%, which is below the average growth rate of the tonnage.
And any particular end customers which have done really well in terms of, maybe not company names, but any particular segments which have done well and which are seeing some decline coming from?
Yeah, as I said, these are all, the consignee market only, the cloth, textiles, even agro-related. Basically, our customer base is from the consignees. In the sense, almost around 60-65% of our business is on a 2-pay basis, where actually consignees are customer, the person who is receiving the goods.
Okay. Okay.
So within this category, again, the main product which are declined is one is agro-related commodities, and second one is cloth and textile is not at a expected level growth.
Okay. And so what about competitive intensity? Is that increase, decrease over time, and how are we seeing that? Have you been able to gain market share maybe from some of the competitors, or how is that coming along?
Yeah, basically the operators which are operating in these commodities, most of the operator situation is even much worse than our position. But we are gaining market share basically because of the increase in compliance levels and other things. And when it comes to other segments, in the sense the newer market where we are entering, the north, the northeast, and the eastern market, there actually we are creating a lot of new customers. That's the reason actually our growth is much higher rate, around 20 to 25% growth is coming from those regions. And another thing is the south and western, we are having very strong position. And not only that, our service level cannot be matched with other operators. Because of these, external factors, there is an impact on the tonnage. But what we are expecting is once things are changed in this season, definitely our growth will be much better in the coming days.
Sure. And last question is, so then longer term, maybe after FY24, what kind of growth rates could we see on a steady state basis?
You are asking overall growth rate?
Yeah, what could we see for like FY25 or 26?
Yeah, as I said, even with this interest, actually we are growing at around 9 to 10% in the current year. And definitely, if monsoon and all other changes, then definitely again we can back to at least around 15 plus growth in the tonnage.
Okay. And assuming realizations will stay the same?
The realization is, as I said, this is directly linked with the fuel rate. And we are hoping that post-election, then definitely there are changes. We are expecting changes in the fuel rate. And before election also, if government announced some reduction on the fuel rate, again it is going to benefit us. Because from the last 1 year, we have not changed the freight rate. Even if fuel rate decreased, then no need to pass on that benefit to the customers.
Okay, fine. Sure. Thank you so much, sir.
Yeah, thank you.
Thank you. And the next question is from the line of Janam Shah from Equirus Securities Private Limited. Please go ahead. Hello, Janam sir, can you hear me?
Yeah, am I audible?
Yes.
Yeah, please.
Yes.
Hello.
The current participant has been disconnected. We are taking the next question. The next question is from the line of Vikash Khatri from VRL. Please go ahead.
Hi, am I audible?
Yeah, please.
Thanks for taking the question. My question is, we have onboarded too many new vessels in the last 2 to 3 years.
Yeah.
And new vessels are more efficient in terms of mileage and the fuel capacity. So how it has converted to our profitability uses of new vehicle? Second question is related to interzone, intrazone. Most of the new branches are coming in north and east. So is there any change in the pattern of interzone versus intrazone business? While on the other hand, my overall per ton realization is constant.
Yeah. The first thing about the efficiency out of the new vehicles. Yes, definitely in terms of mileage and other things, again, these BS6 vehicles are, in mileage terms, there is no much efficiency of these new vehicles compared to older vehicles. It's more or less same. But in terms of capacity, these vehicles are different what we are adding today. In the sense, we are concentrating more on a higher payload capacity vehicles. Not only that, we are increasing the space of the vehicles. In the sense, we are using a longer bodies. The length of the bodies is almost around 32 feet, which is maximum permissible limit within the statutory permissible limit. So basically, we are looking for the increase in the space of the vehicles, plus the adding of the higher capacity vehicles, that will lead to less dependency on the more number of the vehicles, and we can point to point actually the utilization levels will be more, or the single vehicle can carry more load instead of engaging multiple vehicles. That's the advantage. But in terms of operational cost is concerned, one is to some extent the loading unloading charges. That is one. Again, it is a variable cost completely, and fuel cost also. Again, it is completely related. See, there is no much efficiency improvement compared to earlier vehicles versus the BS6 vehicles. So that's the reason the efficiency is overall. The employee cost and the other fixed costs what we are incurring. To some extent, there is efficiency in those matters rather than the variable cost. So because of change in the newer pattern vehicle, the margin improvements is not much higher side. Then second thing, as you said, the zone-wise contribution, yes, we are much growing in the north, eastern and northeast regions. And since the base of these zones are in the range of say 10 to 15%, or even north is contributing 20%. So immediately change in the overall contribution from the zones is not so high. But what we are doing currently in the east and northeast and north, the interzone contribution is not so high as compared to the western and southern zones. So gradually, still our network has to expand it beyond the existing level. Then only we can concentrate more on the interzone or even interstate tonnage growth. With the current spread of branches, still we cannot more concentrate on the intrastate or intrazone transportation.
Okay, so there is no change in the mix of interzone and intrazone in last 2 to 3 years?
Not much, not much.
Okay, thank you.
But it will take under 1 or 2 years. See, if we add, that is a good growth aspect actually. That area is where the intrazone and the interstate transportation still we are not concentrating much in those newer zones. But going forward, if we add around, say, at least 25, 30 branches every quarter, so that will support us for even to start the interstate transportation in states like UP, Bihar, and even West Bengal. So those are additional area of possibilities of growth in tonnage going forward. See, once the network is increased, definitely we can have a control on the services, and even we can compete with those local operators.
Thank you.
Thank you. And the next question is from the line of Krupa Shankar from Avendus Spark. Please go ahead.
Thank you. My questions have been answered. Thanks.
Okay. The next question is from the line of Anshul Agarwal from MK. Please go ahead.
Hi, thank you for the follow-up opportunity. So correct me if I'm wrong. Last quarter we mentioned we are going to take 5% freight rate hikes for contractual customers from December.
Yes.
Any update on this, sir?
Yeah, actually, we approach all contractual customers to increase in freight rates. And the contribution from those customers is around 20%. See, almost around 50 to 60 customers have been accepted, but not exactly 5%. Some customers are accepted 2%, 3%. Some customers accepted even 7-8% also. See, considering the overall tonnage, that percentage is very low. So that's how it will, benefit us to, maintain the realizations on a overall basis rather than, increasing the realization on a good number.
Okay. And a follow-up question to the previous participant's question. Once we sort of densify our networks, won't the intrastate increase in loads impact our realizations because our kilometer transported per parcel kilometer traveled or transported will decrease? How should we look at it, this, sir?
No, basically, even today, the 6,700 realization what we are reporting, in the long route, actually, the realizations are, so there is 11,000, 12,000 rupees per ton also. Since our density of routes, especially in south and west, we are operating in a even short haul basis. There, actually, our realization ranges around 3,000 rupees, 4,000 rupees per ton as well. See, within Karnataka, our realization is 4,000 rupees per ton. It is contributing major tonnage to our overall tonnage. Like this. So it all depends on our route, but there actually what will happen if we start intrastate and interzone, especially in the eastern and northeast states, there actually the tonnage growth will be much higher. So instead of the long route, if we are carrying one route in short haul, we can carry 3 or 4 loads, 4 trips within the same time. That's how it is. Actually, see, on the other side, the tonnage growth will support, but realization will be lower. The realization always we have to go with on a route basis. That is more important.
Okay. Thank you so much, sir.
Yeah.
Thank you. And the next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. My first question is on the pricing that you mentioned that it's getting difficult in terms of increasing prices with your customers. Just trying to understand, sir, what is it because of competition, maybe unorganized or organized? Or what is the alternate that the customer has basically? So, already, you had mentioned last time also that unorganized guys are probably more expensive than VRL. Why isn't that we have this kind of a pricing power that we can pass through some of these costs? Is there a risk of us losing market share then? Is the question basically.
See, again, in some of the markets where we are operating, especially the textile and even some of the agro-related commodities, see, there actually the whole market structure is in such a way that the organized players, again, contribution is around 20-25%, and still 70-75% contribution is coming from the unorganized or small fleet operators. Since even those operators are not in a position, even they are not increasing the rates. And if we increase the rates again, along with a slower demand, again further it will impact on our tonnage. That's the reason again we have to go with a market trend in those areas or those markets wherever we are having competition from these operators. But gradually the competition will come down. And again, see, most of these operators or most of the customers also, they are having a trend that the freight rates are linked with the fuel rates. That's why, we are in a position to take sudden, increase in the freight rates and show some good realization.
Right. So basically, if I'm understanding right, it's competition from unorganized that is resulting in this kind of us being unable to.
Yeah. Since everybody is maintaining, same rates, we don't want to take risk by increasing the rates and impact on the volumes.
Got it. So just understanding last, say, few quarters, you had been mentioning that unorganized is getting weaker and weaker, and the customer wants to shift to organized because of e-invoicing, etc. I mean, isn't that trend still playing and still the customer will prefer an organized over an unorganized, sir?
Yeah, there are certain operators, the decentralized operator, actually, most of them are converting into compliances. And again, see, those operators always means the percentage will come down. See, currently what they are having, the total industry size of around 70-75%, that percentage will come down. But overall, there are some decent operators always, they will be in the market, and again, they are shifting, they are increasing their infrastructure in the sense, basically they are converting into compliance mode.
Got it. Got it. And secondly, we are also kind of inducting a lot of larger vehicles. Are we forced to pass through some of these benefits? Because per unit, obviously the cost will be lower when you ship through these larger vehicles. So are we also kind of passing through those benefits to the customer?
No, I'm not getting larger.
So if we are using a larger truck, our unit cost obviously comes down, sir. The unit cost comes down, and so are we kind of also reducing the prices accordingly for the customers?
No. See, internal, whatever benefit we are having, still we are retaining with us. Not exactly, equally we are passing it on to the customers. But wherever we are entering the newer market, actually we are offering very, very competitive rates to the customers. So that's the reason actually it is compensating on each other. So in some routes, wherever we are gaining a benefit out of our internal, control mechanics, there we are gaining, but we are passing that benefit to the newer market.
Got it. The reason, sir, we are harping on this is because it seems to be a sudden change in this. I mean, until last quarter, I think your commentary suggested that the pricing is possible and unorganized is losing, but this quarter, I think the commentary from your side has changed suddenly. So that's the reason, just trying to understand what has led to this sudden change.
That's why I told you, with contractual customers, even though there was a long gap, but 100% of the customers are not accepted. But we are not discontinued any of the contracts. But similarly, if we do in a non-contractual customers, then obviously we will not have a proper control because the whole markets will get disturbed. That's the reason. And moreover, none of the operators are changing the freight rates. So with this trend, actually, we don't want to take a risk as of today.
Okay. Understood, sir. Thank you so much. I'll get back.
Yeah.
Thank you. Ladies and gentlemen, please press star and 1 to ask questions. The next question is from the line of Jainam Shah from Equirus Securities. Please go ahead, sir.
Yeah, thanks for the opportunity again. So this question relates to the GST. So if I'm not correct.
Yeah.
So sir, what I've been hearing is that we will be having a window till 15th March to convert it into forward charge, and there might be possibility of claiming the GST credit if we convert into that, but there might be chances that we might be, like some of the customers might not be getting the credit if we convert to the forward charge. So what is the stance on that? Are we moving to forward charge? And if at all we are moving, then how much of GST credit we would be getting, which will be eventually improving our margins?
No, basically, see, we are having a good scope of input tax credit, but ultimately what is happening, it depends on the end customer. In our case, what is happening, most of the commodities what we are carrying, those categories are taxable at the rate of 5%. Say, for example, cloth and textiles, majority of the goods are taxable at 5%. Even most of these, the cashew nuts, agarbatti, and even coconut product and betel nut, these are all products actually taxable at 5%. Even leather products for that matter, which is again major contributor to our tonnage, which is taxing at 5%. Now, actually, what we did, we are putting effort that whether we can shift to the forward charge. Because the forward charge is going to benefit us like anything. If at 12% if we shift, we are having a lot of input tax credit. In a year, actually around 140-150 crores credit we are having. But ultimately what is happening, it depends on the end user. So we inquired with some of the customers and one-on-one basis with the large customers also who are into these categories like cloth, footwear, and even the cashew nuts and all. But none of them are in a position to accept the 12% GST because they are already sitting with some of the credit in their books and the utilizations are very lower at their end. That's the reason actually they are unable to accept our increase in the GST rate. With this kind of input, just we are holding on that decision. So as of now, again, we decided in December we worked out on that. But ultimately, so the customer feedback is not in an acceptable manner. That's the reason, again, we are holding on that decision.
Got it. So maybe in near term, it might not be the possibility.
Yeah.
Because this number 130, 140 crore is quite big number.
It's quite high because most of the infrastructure is owned by us. Even the purchase of the vehicles, we are paying 28% GST. And even all spare parts, tires, everything, see for new tires, we are again paying 28%. But spare parts and all, we are paying 18% GST.
Correct, sir. Correct. Got it. And sir, on the cash EBITDA margin, so how much rental we would have paid in these 9 months, which have been eventually booked in rental and in the interest and depreciation part, even yearly number, estimated number would work, which is like eventually coming below EBITDA line item.
Yeah. On an interest part, in the current quarter, say, other than Ind AS, it is around 6 crores.
Okay. So out of 21 crore, 15 crore is for Ind AS.
Yes.
Okay. And for the depreciation part?
And on depreciation part, it is around 36 crores.
36
related to Ind AS. Yeah.
Okay. So total would be 50 crore we would have paid. So, sir, our EBITDA number is at around 96, 97 crore, and we are paying around 50 crore for the rental, which is eventually leading to EBITDA margin, pre-Ind AS EBITDA margin or even pre-Ind AS EBITDA number of only 50 crore rupees. So how we are looking at this particular thing? Like, we are expanding the branches and this expense is increasing, but on the other side, the tonnage is not increasing.
No, on the branch side, there is no much of an Ind AS impact because most of the shorter lease agreements will be there. Because we carried out some of the increase in space of the larger transshipment hubs, that actually, and the long-term lease. There actually, there is an enhancement in the depreciation and interest cost or even the rent expenses. But we are ready, kept ready all infrastructure facility, enhanced spaces in most of the transshipment hubs. So going forward, no need to incur or enhance further transshipment areas. So it will have a further, drastic, there will not be expansion at all because we have already carried out that exercise. So this will be fixed in nature at least for 1 or 2 years. Then based on that, whatever incremental EBITDA will be there, then definitely it will increase in the normal EBITDA. The rental expenses, see what I'm saying basically, the rent expenses will have its own control because the expansion will not be there in the future. Those expansions exercise have been already carried out and we are having enough space in most of the transshipment hubs as of today.
Got it, sir. That's all right from my side. Thank you so much, sir.
Thank you. And the next question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead, sir.
Yeah. Sir, just wanted to know the revenue mix on the basis of different states, like which states contribute how much to the revenue?
No, zone-wise, we're having South zone is contributing around 40-45% to the tonnage. This is based on the origination, what I'm saying.
Okay.
And North and West in the range of around 20-25%. And remaining around 5-10% is coming from the Eastern and Northeast.
Okay, got it. And I think, as you said in your opening remarks, the agriculture segment contribute around 40-45% in revenue. So going forward...
No. Agro sector contributes around 8-10%. That is degrown by around 5%. But Southern zone contributing around 40-45%. But that Southern zone growth is hardly around 2-3% in the current 9 months.
Okay, so are you planning to diversify into other segment or like, what's your plan? If I can get some understanding on that.
No, plan is whatever, network expansion we are doing, actually we are doing in an untapped market, especially in the Eastern, Northeast region and the North regions. There actually, it's a newer market and definitely we are expecting very good growth from those regions. As I said, those newer regions are growing in the range of around 20-25%. So definitely, that trend will continue. And most of the branches are again interlinked also. Say, for example, if any branch we open in the north, if it is a demand is lower in south, again origination from that branch also will get impact. So overall, it is integrated to each other. But those branches are showing better performance because these are all newer market and base is very low.
Okay. Got it, sir. Sir, I want to talk about the realization front. Like, as you said, I think South gives you the highest realization. So, can you give any guidance on FY25 and 6 on the realization basis? I think on volumes you have given around 10 to 15%.
See, in this year we did a volume growth of 10%. If things are normalized in the next year, definitely our volume growth will be more than 15%. On the realization front, what is happening, it is directly linked with the fuel rates. Your fuel rates change, after the elections or something, then immediately we'll carry out the increase in the freight rate. That's how the realization will change, but it's all directly linked with fuel rate.
Okay. Okay, got it, sir. Thank you. That's it from my side. And all the best.
Thank you. And the next question is from the line of Kushagra from Old Bridge Asset Management. Please go ahead, sir.
Yeah, hi. Thank you for the opportunity. Just one question, sir. Can you give us, the tonnage breakup between intrastate and interstate in your overall tonnage right now? And how much do you aspire to take? I mean, because you mentioned somewhere earlier in the call that going forward, as in when your branch network expands, probably the intrastate movement might increase, like you have in Karnataka, which comes at lower realization, but overall volumes growth is quite significant. So just wanted to understand where we stand now and how much do you aspire to take it forward. Even if you want to give a color, let's say zone-wise, for example, South would have a higher intrastate, Western and North may not be as much. So a broad color over there and where things are headed will give a good color.
See, for North, East and Northeast, we do not have much of a inter-region services also. Okay. So whatever we are doing from North, East and Northeast, which is almost around 30% of our business, there actually it is completely interstate. We do not have much of an interstate service in those areas. When it comes to the West and South, yes, we are having an interstate, and see, South is around 45% of the total tonnage, out of which around 50 to 60% is interstate. And similarly, when it comes to West, which is contributing say around 20%, their intrastate is or intra-region is again in the range of around 8 to 10%.
Okay. So just a fundamental question.
On an overall basis, the intra-region, it will be around 35 to 40% of the total tonnage. So remaining all is interstate and inter-region also.
And how do you, so going forward probably, as in when your branch in Northeast expands and West expands further, probably your intra might go higher than your interstate, right?
Yeah, currently see in North, East and Northeast, we do not have intrastate services.
Right.
So there actually once the density of branches increases, we will start even interstate and intra-zone services as well.
All right. So apart from the volume growth support which comes from the intrastate, can you give more color with respect to the profitability and the benefit of unorganized to organized shift in terms of consolidation and everything which you have spoken about in the past couple of quarters on this GST requirements, e-way bill requirements and all? Are these benefits aren't more on interstate than intrastate? And just wanted to get a perspective why focus more on intrastate rather than interstate.
Yeah. See, for interstate services, always the compliance level is very high. Because most of the unorganized, actually, they are not depending much on interstate services because the authorities are differ from one place to another. For example, if we want to move material from, say, Bangalore to Delhi, each and every officer state is can be verified our vehicle and verify the documents. For unorganized operator operating for interstate services is much difficult as compared to interstate. In most of the interstate services, what they do, the service can be completed within 12 hours, 24 hours like this. So there the non-compliances are still on a higher side. So there the competition from the unorganized is much higher. Even in the local market, if you see, some people are individuals are operating like Tata Ace 407 vehicles. They are operating point-to-point service within a 200, 300 kilometers. There actually we cannot compete with such operators. We cannot render our services in those areas. Because they are having a small vehicle, give point-to-point service, no overheads, nothing. And rates are very, very cheap rates.
Right, exactly. So this is where the question was. I mean, given the benefits of unorganized to organized and sector consolidation is more on the interstate and longer routes, why not focus more on them rather than the intrastate volume? This was the question.
So intrastate, see, basically that's the reason. Currently, what we are doing, see, we are not opening branches in southern region. Whatever we are having intrastate as of today and interstate as of today, we are maintaining it. Similarly, in western region also, we are not opening much of our branches. The reason is we don't want to do intrastate services over there. See, our focus is open branches in the north-northeast area and connect with the south, connect with the west, and connect with the north to east like this. So we are more concentrating on the longer route and interstate services. But going forward, if the branch density improves, see, like a state like UP, currently we do not have any interstate service. Currently, we are having around 56 to 60 branches in UP alone. But if that branch spread to around 200 branches in UP, that is possible. In UP itself, we can open another 140, 150 branches. If our density reaches to that level, then we can have an intrastate service also in UP. That is added advantage for us.
Understood. Sure. This is more like a natural flow of things in your business growth.
Yeah.
All right. Thank you and all the best.
Thank you.
Thank you. And the next question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead, sir.
Thank you. So my question is more around what is the difference in competition in our home ground, which is southern areas and the western, versus what you are witnessing in the newer regions, like you said, north, northeast, and west. What is the difference in organized and unorganized, or maybe the pricing or the general nature of competition?
Yeah, now actually what's happening across all the states in India, there are same compliances. Be it a Karnataka, be it UP, be it Bihar. You take any state, there are same compliances. Earlier, each and every state were having a separate compliances and people used to take advantage of that. Now, what is happening across India, there are same compliances. It is advantage for us that, see, people cannot question on the compliances. Earlier, what used to happen in states like Bihar, UP, we were unable to do services. We are unable to open a branches with that much of very high competition or high non-compliances were there from the local operators. Today, that is not the scenario. For the interstate services, basically the compliances are very high and the operators are answerable to different tax authority in the sense jurisdictions. Because of that, actually, even the small fleet operators also, they are very careful while doing the interstate services. And intrastate service, still there are the non-compliance are existing and people are taking advantage. That's the reason we are not focusing much on an intrastate service even in north and eastern areas. So our focus is currently open in newer branches and concentrate more on interstate services. That's what we are doing, and it is giving good results for us. As I said, the newer branches alone contributed around 3 to 4% in the current year. It is very good contribution from the new branches. So that's the reason our focus is currently only on that aspect rather than, again, start intrastate and all these things in those areas.
Sir, and I understand that a lot of load that we carry, even from which originates from south, like you said, would come from maybe the manufacturing hubs, etc. So when you take this to, let's say, northeast or west, what are our fill rates or utilization rates? What is the difference in forward and return utilization?
Yeah, always what will happen in hub and spoke model, hub to hub operation, always it is a complete utilization. So that's the advantage of hub and spoke model. We get, our structure or our allocable of vehicle will be in such a manner that both sides we have to get a 100% load capacity. And apart from that, why we are engaging the outside vehicles even at around 5 to 6% of the total fleet size? It's only because of to match the load pattern. In the sense, one side will have a load, the return load will not be there. At such roads, actually, we are engaging outside vehicles. So always we will see that our own vehicle should get a load in both the on and off the, as well as the return loads. And wherever there is a return load issue or something, then we are engaging outside vehicles. And in spite of that, we face some of the issues that our vehicles will not get a return load. In that case, actually, we are engaging our vehicles for the full truckload. Currently, the full truckload is again 7 to 8% of our total revenue. This revenue, full truckload, is not our foray. We are not focusing on the full truckload. But to only send back these vehicles to the original destination, we are engaging these vehicles for a full truckload. This is how the structure. See, always we go with the utilization. See, we are very cautious on that. And that's how the hub and spoke model will give support for us to use the infrastructure properly. So even if we open any branch in the northeast or any remote area, it is not that the vehicle utilization will be lower. If it is a one-side load, then we engage a smaller vehicle and which will be outside vehicle. That's how it is.
Okay, so utilization from hub to hub is complete on both the ways, but it is only from the hub to branch which will just ramp up with time as we spend more time in the region.
Yeah, if there is a slower demand and slower market, spot basis we engage outside vehicle and we bring that goods to the hub.
Okay. Sir, last question, just to understand, like you have mentioned on intrastate and interstate. So within the interstate logistics and within our flow PTL, what kind of competition exists in India? And if you could help bifurcate that into organized and unorganized, how many players are there?
See, most of the intrastate services still are in the hands of the unorganized operator, all small fleet operator, I can say. And even today's world, what is happening, most of the individuals are servicing, say, from Bangalore to 200, 300 kilometers, the individuals are covering. And even, say, from, Mumbai to 200, 300 kilometers, most of the individuals are operating with a single vehicle. They can give point-to-point service and end-of-day services. Their actually concept is totally different.
Market.
Sorry?
No, sir, I meant the interstate market. Across different states.
Interstate market, yes, the unorganized contributions is coming down drastically because of the increase in GST law, GST compliances. There actually we are having a lot of scope to grow, and even in the current scenario also, there is a good growth in the state to state operations rather than the interstate operations.
I mean, what is our edge and our position in that market, in that competition?
Where?
In the interstate market, in the interstate logistic transportation, since it is a large...
Interstate, wherever we are entering the newer market, we are offering a concessional rate as of today. But wherever there are strong routes, we are maintaining our rates.
Okay, sir. Okay. Yes, sir.
Yeah.
Understood. Thank you.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Sunil Nalaudi for closing comments.
Yeah, thank you all participants. It's good that many of them interacted about the inter and interstate movement, how the structure in India. So basically, our focus as of today more is on the interstate services. And wherever we are opening new branches in the remote area, those are all, most of these branches are contributing for the interstate services. And as I said, definitely the opening of branches is going to give a lot of advantage for us in the coming days. Basically, once the density of the branches increases, we will have a lot of advantage. So states like UP, Bihar, especially in the north side, even Punjab, Haryana. So those states currently we are not in a much of interstate services. So going forward, density of branches is going to support us not only for interstate, and once the compliance starts increasing further, then definitely we can concentrate on interstate services also, or intra-region for that matter. So with that, the structure-wise, we are having, the structure-wise, it's the best structure in India what we are operating today. But due to some external issues, especially the one is monsoon and other things, little bit impacted on volume growth. And the freight rates, again, we are unable to increase because of the completely it is linked to the fuel rates. So we are expecting these changes very soon, and definitely we are back to our good margins as well as good growth. That's what actually I want to say again. With this closer remark, I wish to conclude this call, and thank you everyone, and thank you all participants for your patience here. Thank you.
On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.